I went back to look at these same periods in the election years and all of this stuff, and basically the market goes bananas all the way until March. It kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends, because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in.
A massive crypto rally is on the horizon, with prices expected to surpass the explosive gains of 2017. Raoul Pal, CEO of Real Vision and veteran macro analyst, predicts the 2024-2025 bull market will resemble the dramatic 2016-2017 blow-off top cycle rather than the more restrained 2021 run. A blow-off top is marked by rapid price surges driven by market euphoria, heavy speculation, and heightened risk-taking. In 2017, Bitcoin skyrocketed from $1,000 to nearly $20,000, while other cryptocurrencies saw similar exponential growth, pushing the market cap to record levels. The 2021 bull market, however, was muted by significant challenges, including China's mining ban, U.S. regulatory pressures, and environmental concerns over Bitcoin mining. These factors led to price corrections and stifled the market's potential. Today, many of these barriers have eased, with China adopting a more crypto-friendly stance and the U.S. electing its first pro-crypto president. Pal believes these developments set the stage for a stronger, more unrestrained bull market. Pal remains confident that this cycle will produce a blow-off top, driven by a favorable regulatory environment and growing investor enthusiasm. He anticipates dramatic price surges and renewed mainstream interest in digital assets. Stay tuned as Pal shares his detailed insights and predictions for what could be one of the most exciting crypto bull markets yet.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Yeah, I mean, look, seasonally it happens. Almost whoever wins the election. Using the everything code cycle, we're in the peak kind of debt refi cycle, so you need liquidity to come in. I actually did the maths in Global Macro Investor over the weekend. China's added $8 trillion of liquidity via both state sector and via M2. I mean, people don't realize. So liquidity is back. Everything was in place. And then we've got this other thing, which we'll talk about how the cycle plays out, but we've taken the big overhang off, which is like who's allowed to do what. And, that is a big deal. And there has to be a re-rating, not just on liquidity, but a potential re-rating of the sector. So it's a big deal.
How long do you think it takes for that to show through in markets? Like, is there like a lag time?
Well, I don't know, because, traditional markets, they tend to sort of forward price it as soon as it gets the news. Then you get, a corrective period, but because the flows won't come until the new year, right? And we don't even have a new government in. So really the flows don't come until later, because you actually need to see the regulators. It's not like Goldman Sachs can go, oh, great, Trump's in. We're all free to do what we want. They won't. They will have to wait until we're given new regulation, etc. So it kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends, because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in. Every time we get to this point in the cycle, Bitcoin dominance collapses. Risk-taking, and now with the new government, risk-taking is going to be rising. Also, the other thing that I found, the main driver of alts versus Bitcoin, so i.e. the inverse of dominance, is actually driven by the ISM survey, business cycle. Makes sense, because if the business cycle starts going more positive, because it's been very lackluster, what we tend to find is that risk-taking increases because people's disposable income goes up, their businesses earn a bit more money, everybody feels a little bit better. And that drives the same as small caps versus large cap outperformance. It's basically the same trade. You see it in credit markets as well. It's all the same trade. So it's perfectly set up for that now. All of our forward-looking indicators suggest that the ISM from here starts climbing above 50. 50 is the really big signal for the alt season. Also, if we go back to 2020, it was exactly this time that ETH started properly outperforming. It's again the same point in the cycle. And if you play through, and I wrote a thread on this yesterday, is ETH is where institutions will build, whether it's on layer ones or layer twos, but that's where DeFi is. That's where institutions are not going to get fired for. It's the kind of Microsoft of the space. So I do think as regulation frees up, ETH is going to get a lot more activity than people yet understand. So I think it's a good thing. And they've built it for scale. But the layer twos, if there's not much activity going on, then the price doesn't do well. But if you can start bringing the financial institutions onto this space, ETH is the most likely candidate for it at scale.
Bitcoin's recent surge has sparked a chain reaction in the cryptocurrency market, leading to massive gains across altcoins and memecoins. While Bitcoin hit record highs this week, altcoins like Solana, Cardano, Avalanche, and Sway have taken center stage with impressive performances. Cardano has soared over 80% in the past week, and Sway has climbed 60%. Raoul Pal, CEO of Real Vision, predicts memecoins like Dogecoin will be next to skyrocket, noting in a tweet that we're approaching the last chance to add zone in crypto before memecoins break out. Pal remains optimistic but warns traders to stay disciplined, advising against overexposure to risky asset. He suggests limiting meme investments to less than 10% of a portfolio, emphasizing the importance of managing risks during this high volatility period. Beyond cryptocurrencies, related stocks like Coinbase and MicroStrategy are also booming, with both surging 18% in a single day. Bloomberg analyst Eric Balchunas highlighted that these stocks ranked among the top 5 most traded this week, alongside Tesla and Nvidia, signaling that the crypto frenzy is spilling over into traditional markets. As excitement mounts across digital assets and stocks, Pal joins a discussion with Mando and OSF to analyze the intensity and potential duration of this bull market. They delve into why this cycle could be more explosive than previous ones and what it means for traders navigating these thrilling but turbulent times.
I put Coinbase as a trade idea. I mean, it's already been it's up 240% in our GMI portfolio and our Macro Insiders portfolio, but I put it on the Real Vision platform yesterday or day before yesterday because it's so fucking obvious.
Yeah.
Right? It's the toll keeper to all activity for anybody in the largest economy in the world. If you just scroll down, Arthur, there, just show the chart. The chart is, I know, Over, you're not a chart guy, but that's a fucking gigantic invert head and shoulders. This is going to La La Land squared.
Yeah, I agree. Like, this is the thing that I am bullish on ETH as an ecosystem. What I found difficult is just that ETH itself, just because of the changes that were made earlier this year, just like you need massive scale for that burn to come back. Whereas Coinbase, you're going to see every major US institution pick Coinbase as either a custody partner or to tokenize on base.
There's somewhere between BlackRock and JP Morgan. That's the position of power they have in this new emerging economy. I mean, what a position to be in. So it's currently a $66 billion market cap. I think this bull market, the whole space will end up being 10 to 15 trillion, somewhere between that. So how much is Coinbase worth in that? I mean, it would not surprise me if Coinbase was worth $500 billion.
Yeah. That's crazy at $66 billion.
It's insane. It's so cheap.
Mental, isn't it? Yeah.
Yeah. Considering the size of the market that's already there, it's a $2.5 trillion market now. So if the market goes 5x, this probably goes 10x.
Yeah.
So feels, but that doesn't sound stupid. So, I mean, that's a hell of a trade for people. If people don't want to trade the cryptocurrencies themselves. I went back to look at these same periods in the election years and all of this stuff. And basically, the market goes bananas all the way until March. And then somewhere March, April, there's tax season. And everyone's going to have to pay Uncle Sam and Her Majesty or His Majesty. And they have to start selling a bunch of stuff. that seems to happen every time where you get a pullback. And then it's going to depend on global liquidity. If it's still strong, then we end up with a strong pump into the end of the year. If not, we kind of get something more like last time. But yeah, I mean, I'm just thinking it's banana zone all the way through till March.
Raoul Pal predicts the banana zone to extend through March, peaking during tax season before a brief cool down and another potential surge. He urges investors to approach this phase strategically, maximizing opportunities without being reckless. In a tweet, Pal describes the banana zone as the critical period where prices soar, and for those with established core allocations in Bitcoin, Ethereum, or Solana, the best move is often to do nothing. For those seeking more risk, Pal suggests cautiously experimenting with newer chains like Sway or even dabbling in meme coins, noting his own involvement with some projects. However, he stresses the importance of maintaining 90% of your portfolio in solid, top-tier assets as a safety net. The real threat, he warns, lies in overtrading, chasing breakouts, or using leverage, common mistakes that can lead to portfolio implosions. Pal's core advice: protect your assets and avoid unnecessary risks in DeFi or speculative ventures. Reserve your adventurous trades for the 10% of your portfolio designated for high-risk plays. Embrace your inner Deegan if you wish, but always trade smart and safeguard the majority of your holdings. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.